Benchmarks indices turned volatile after a quiet start to the week. Sensex below 72,000, while the Nifty trades at the 21,700 mark. Most of the sectoral indices trade in red. PSU, banks and FMCG emerge as the top losers. Meanwhile, realty and auto in the green. Jupiter Wagons aims to improve return on equity by 20%, says MD Vivek Lohia, while speaking to NDTV Profit that management paints a bullish outlook. Stock soars over 3% on the back of order wins. In oil and gas companies, zoom in trade with ONGC, HPCL and Indian Oil hitting a 52-week high in trade on the back of JP Morgan report. And Bajaj Auto in the fast lane, a board to meet to consider and approve a proposal to buy back. If it goes through, this will be the second buyback for the company in the last 2 years. This is Agam Vakil and you're watching the F&O Show, a show in which we take you through all that is happening in the Indian derivative market space. But before that, a quick look at the markets, and we are looking at a little bit of volatility this Monday morning, and even though prima facie it may seem quiet and the Nifty has moved back into the mark of green, well, there certainly has been an increase in an expansion in option premiums, so to speak. The question really is, what do we do from here on, especially considering we are heading into, well, another results season, and a whole host of large cap companies will start announcing earnings very soon. And, well, of course, for now, we are continuing to keep an eye on the benchmarks. But to very quickly take a look at what's really happening in the markets as well, let's start by talking about the constituents in the Nifty and see where there has been traction. What are the stocks which are pulling the Nifty up, and what are the stocks which are weighing down on the Nifty? So you do have Reliance Industries along with something like a Bajaj Finance, Bharti Airtel advancing, and on the other hand, a whole host of FMCG companies like ITC and HUL weighing down on the benchmarks. I want to also address what's happening in the broader markets. Has there been an outperformance? Well, not really, because we are still seeing some of the broader market indices in the red. Mid-cap 100, for that matter, is currently marginally on the decline. We do have weakness in Bandhan Bank, which is down by as much as 3.8%. We have some amount of weakness in Navin Fluorine, which is down 2.3%. Dr. Lal Path Labs, along with something like a Mankind Pharma, also under a tad bit of pressure from the healthcare space. And we also have Gujarat Fluorochem, which is down, looking at about a profit taking coming through. On the gaining end, as far as the broader markets are concerned, Trident looking at a sharp up move. Trident is up as much as nearly 13% as we speak and trading near days highs from the broader market. And Vodafone Idea as well continues to climb. On an absolute basis, it may not be much, but in percentage terms, it is gaining 3% yet again. And this one has been on an up move as well. Along with that, we have CG Power. CG Power starting to show some moves as well. That's up around 3.4%. This as far as your markets go. Let's talk about how the futures and options space is panning out. And for now, as far as the Nifty futures go, well, we do have about a 2.2% increase in open interest towards what we could perhaps interpret as longs, considering the benchmark is in the green at the moment as of now. And the Bank Nifty futures as well, looking at, let's pull that up as well, and should be up on your screen. That's looking at a good 6.3% increase in open interest. And, well, we're going to, it's yet to be determined whether or not this was the longs or the shorts. Sure, the Bank Nifty is marginally in the red right now. But not as much so as to determine that this, in fact, is towards the short side. As far as the option market goes, well, we were suggesting a 300-point range between 21,800 on the higher end and 21,500 on the lower end. But 21,800 is not too far from current market levels. And there is a stronger resistance level around 22,000. You know, even a small flip could actually put the Nifty well above that 21,800 mark. So that's not the most significant of resistances at the moment. Even in today's day of trade, we are seeing unwinding as far as calls are concerned and a little more writing around puts. And that's largely on account of what's happened in the last 15, 20 odd minutes. So keep an eye on that one as well. And of course, the question really is that what do we do with all this data? So let's get in our experts for today. We have Soni Patnaik of GM Financial Services and Brijesh Ail of IDBI Capital, who's joining us on the show. Good morning to both of you. Soni, I'll start with you. Your assessment on the Nifty, how would you trade this one?
Hi, good morning, Agam. And if we look at Nifty, of course, it's in the consolidation mode of between 21,500 to 21,800. And it appears that it may remain in this consolidation mode for some more days. Only above 21,800, we can see that it can head towards 22,000 or so levels. As long as 21,500 is holding, it you can just buy on a small dip with stop loss of 21,500 and look towards 21,800, 21,900 or targets. The moment 21,500 breaks, we may see some profit booking correction taking place towards 21,300. But however, the broader range still remains at 21,300, which is a very crucial support for Jan CDs, considering how the rollovers have taken place on the longer side. Speaking of Bank Nifty, I think Bank Nifty is also in a consolidation mode between 47,500 to 48,500, and either side of the range break only can determine a further trend. Perhaps above 48,500, we'll get more clarity in Bank Nifty, where it can head towards 49,000 levels. Just the levels are not breaking out of the range. It is to remain in this consolidation mode. So one may just maintain a cautious view for either side of the break of the range.
Right. Well, Brijesh, good morning to you as well. Your view on the Nifty at the moment?
I would be like, if I do look into Friday's data, that I was pretty confident in the morning. We are about to see the good amount of breakout. So the good part is like it has taken support at the S1 level, and now it is slightly bouncing back. I'm of the opinion that during the day, if today's day's high is taken out, then probably we are going to see some good upside in the Nifty. It can be a trading bet also with 50-60 points kind of a stop loss above day's high. So bias is extremely positive. 21,800 is the resistance zone. But if I look the FI data as well as the index buying on the Friday session, I think maybe during the end of the day there should be some upside momentum. It looks positive on charts, and on the lower side, as everyone is mentioning, 21,500 maybe the support zone. So on a larger degree, what I believe, 21,400, 21,800. This 400 points is the range for the Nifty, and I have a view that this 400 points on the higher side, 22,200. That should be the near-term view for the Nifty. Same with the Bank Nifty, 48,000 is the trigger. So right now the Bank Nifty is almost at 48,072. So I have a sense that it may be a slow mover, but then the directional view for the Bank Nifty is positive. We should be talking somewhere close to another 2,000 points rally in the Bank Nifty. 50,000 would be the target, or maybe the technical levels which I'm looking right now. So more aggressive on the Nifty as compared to Bank Nifty. Nifty, I think once about days high, I would like to take the buy call for the next 1 or 2 trading session.
Okay, let's pull up the Bank Nifty because we do want to take the conversation forward on the Bank Nifty in terms of the constituents of the index and see where there is perhaps a short build-up, perhaps some short covering. The 12 names that comprise of the Bank Nifty at the moment, only 3 of them are in the green, and the balance are in the red. Even among them, if you consider the kind of move that you've seen, there is long building up as far as ICICI Bank, Axis Bank, along with AU Small Bank Finance is concerned. But State Bank of India is under pressure at the moment. That's where your long build up is to the tune of 1% yearly. And HDFC Bank, we don't really see too much traction in HDFC Bank, but on the whole, that's where there is short build up. A good 2.5% increase in Kotak Mahindra Bank's short build up as well. And something like a Bank of Baroda, which also is looking at about a 7.8% increase in open interest. Of course, remember the Bank of Baroda has also come up with its quarterly updates, which is also the likely reason why we are seeing that pressure come through with a 3.5% decline there. We already have Brijesh's view on the Bank Nifty. Soni, how are you assessing the moves on the Bank Nifty?
I think Bank Nifty, if it's able to cross 48,500, then it becomes a good buy. And aggressively, you can see it heading towards 49,500 plus levels. Even it may test 50,000 as well. On the downside, 47,500 holds as a very important support. Even when we saw the volatility coming in for Bank Nifty last week, it did not break or close below 47,500. So as long as it's not closing below 47,500, any dip in Bank Nifty can be seen as a buying opportunity as long as 47,500 is holding. It's consolidating right now, but perhaps, it may break out of the consolidation in the second half of the Jan series. And, you can see the move coming in for Bank Nifty towards 49,500 plus levels.
All right. That's your view coming in for the Bank Nifty. And, well, we'll continue to keep markers on some of these names. But on that note, we'll slip into a short break. But on the other side, we talk about stocks and a lot more. Stay tuned, and we'll be back in just a bit. Welcome back. We now take a look at all the stocks which are seeing attraction in their open interest. So let's start by talking about where we are seeing significant increase in open interest and then where we are seeing a decline in open interest. Let's pull up that list of all the stocks which are in fact seeing that traction there. So we do have a longs build up in GMR Airports. We've had a lot of news flow of late. GMR Airports has just been going from strength to strength, and it does seem like we are seeing another 10% increase in open interest towards what looks like potentially fresh longs at this moment. Marico, of course, under pressure after, well, a subdued quarterly update coming through. Most likely we're going to see some under pressure, at least as far as the top line is concerned. And ONGC is the other one where we have, in fact, seen longs come through. We've also had updates, a lot of brokerage updates when it comes to the oil and gas space in general. Bank of Baroda, again, under pressure. We spoke about that briefly. That's also under pressure on account of quarterly updates. And Aarti Industries, because, well, it's sales in the same pack as Marico and Bank of Baroda. Now let's talk about all the stocks which are seeing unwinding, squaring off positions, and we have Godrej Properties, Piramal Enterprises, Granules, Nalco, all of them looking at long unwinding coming through. A decline in open interest, even as their respective underlyings see a decline as well. And save for that, we are looking at Dabur with a little bit of longs building up, but not too much to speak for. Let's get in our experts on this note. And, Soni, I'll start with you on your picks. I believe you have two longs, one on BHEL and the other one PFC. Can you take us through that?
Right. So BHEL, we are seeing that it is holding a good support of 194 to 192 as a good range. And, holding that support, it is making multiple attempts to sustain above 200. There is good put writing happening at lower strike prices as well, around 190. So there's a call option recommended because it's a safer play than directly in future. So BHEL 200 call in buy 9 to 10 premium, keeping a small stop loss of 6 and targets of 14 to 16. So the view remains bullish for BHEL. If it's able to cross and sustain above 200, you can see it heading towards 205 to 208 levels. So the second pick would be PFC. PFC in this choppy market, it has been continuously holding above 400. It gave a breakout above that level and still, maintaining above that. So as long as you see some dip towards 408, 407, you can enter that range, keeping a small stop loss of 400 and targets of 425.
Okay, that's, two long comings from Soni. And Brijesh, what about you? What stock ideas do you have for us this morning?
Yeah, I would be going with the IndusInd Bank. So basically, IndusInd Bank was one of the outperformers, and this is more with the derivatives data. So as you spoke, like this is seeing the long build up in the daily as well as for the past 5-6 trading session. The build up is extremely positive, and it's a long build up. So I believe what corrections we are seeing in the IndusInd can be used as a buying opportunity. So at current level, I think it can be bought in the F&O segment at current price with a stop loss of 1633 for the target of 1690. So this would be for the next 10-12 days kind of a trading view. But then directionally, I think that should be the bet for the IndusInd Bank. So whenever this Bank Nifty moves, I think Axis Bank and IndusInd Bank, these are the two stocks which should be on a very aggressive note. And IndusInd is an uptrend. So definitely, I think corrections in this particular stock should be viewed as a buying opportunity. After that, I think today, the TVS Motor is again picked up the momentum. It's again moving up. I think it's immediate high at 2050, which is the resistance zone. It looks like that will be taken out. And basically, this is an uptrend stock. So I'm playing the momentum play. So with a stop loss of 2010, I think one should take a long positions, and in the near term, 2087, close to 2087, 2090 can be the target for the TVS Motor. It is looking very strong on charts.
Okay. From there on, let's talk about some obvious trades this week. And of course, information technology will be right at the top of a lot of traders' focuses. Well, let's talk about Infosys then. And it's currently trending, very, very quietly at the moment. But Infi will come out with its earnings on Thursday. And we're likely to start seeing some amount of positions building up, specifically in the options market, even if not so much in the futures market. Let's also take a look at what Infi has done over the past few days. If we can pull up a 1-week chart or a 1-month chart to see where and how Infosys has in fact traded in anticipation of its earnings. This is your 1-week chart, and it has been relatively volatile. 1 month, of course, it's not done too much, but over the last 1 week, it has seen quite a bit of swing towards the positive and the negative. If we can also take a look at how the index futures are panning out right now, it will give you an idea of where positions are building. So there's a 5% increase in open interest, but of course, the underlying is currently flattish. You can't really determine as to where there has, in fact, been traction there. But even in terms of the options market, and, a really common strategy that a lot of investors use as far as something like an Infosys or TCS is concerned, is that right before the earnings come, they go ahead and deploy delta neutral strategies. And by that, I mean direction neutral strategies, but strategies which would take advantage of your option premiums shrinking, because right before the earnings come in, your option premiums have substantially expanded because of the expectation in volatility. But once the event of the earnings is out, you have a contraction in your premiums because of the volatility factor going away. Sure, of course, that doesn't necessarily mean that you won't have sharp moves, because naturally after the earnings come, you certainly will and may have a sharp movement. But as far as the Vega factors is concerned, and by that I mean the volatility factor is concerned, that goes away, which is why a lot of traders tend to write straddles and strangles moments or perhaps a day before these earnings come through. Anyways, I'm not going to talk too much about these strategies. Perhaps I could take a view from what our experts have to say with respect to TCS and Infosys. Soni, if you're tracking any one of these, if you could give us your view, how would you play this ahead of earnings?
So I think looking at the options data for Infosys, especially, I think 1500 is holding as a very good support as per the options metrics. It has good open interest at that strike on the put side. So it's indicating that that's a support in any case. However, on the upside also, there are multiple resistances, starting with 1560 as the first level of resistances all the way till 1600. So one can definitely play in this range, buy towards the lower end of the range, keeping a very strict stop loss of 1500 in futures, and it can bounce till 1560. So 1560 to 1580 can be that range where you can look for a minor profit booking. In any case, because of the ahead of the earnings play, it is also advisable that one can hedge your strategies with the simultaneous buying of put of 1500. In that case, it just becomes a good protective put hedge strategy.
Right. Brijesh, what is your view? How would you play these with these names at the moment?
I somewhere believe this 1500 or more on the charts. I think the averages are turning down, so maybe more on the negative side. I would be happy to buy the 1500 put on the lower side. I believe it has to correct somewhere close to 1480, 1450 level. Maybe the post, we are not expecting the good numbers from the Infosys. So maybe with that, with little bit of the fundamental view, I'm not very pretty sure, but I would be more happy to take call on the negative side. Somewhere 1500 put would be the view where I would be betting on.
Okay. All right. Well, we'll leave it at that. Thank you so much. Thank you both for joining us and taking us through your views on the markets and also helping us with a handful of trading ideas. It's time to wrap. But before we do that, Harold van der Linde, head of Asia Equity Strategy at HSBC, spoke about what he would do in terms of, India, as well as several other factors which are playing in favor and against, and how he would construct a portfolio around these. This is what he had to say. Listen in.
There are some risks that are maybe more near-term and that pop up once in a while. For example, higher oil prices would be a risk, the currency moving. Other markets such as China suddenly rallying and sucking out the capital that is in India could be a risk. I would consider those to be more near-term risks. Inflation is always a risk. If food inflation happens, we're living in a world where, the Red Sea and what happens in Ukraine and other places, food inflation could suddenly come back. And that's not good for India. It means your interest rates go up. And I would call them sort of cyclical risks. Then there are risks really about the long-term path for India. I think India could do more in terms of education in large parts of the country. There are parts of India where education is excellent. There are parts of India where education is poor. If you don't address that, these regions will struggle to perform. So that's something that I think could be a risk in the very long run, at least for some parts of India. I think what we see in other countries is sometimes sudden shifts in policy. Now, that is not really the case in India net, but people are very sensitive to that. So if you see sudden shifts in policy, changing regulations for industries, that is a risk that is everywhere. It's not so prevalent in India at the moment, but neither was it in China until a couple of years ago. So that's something people would be quite sensitive to as well.